Okay, so welcome everybody. Welcome. Nice to have you guys. It's time for a little stock and option webinar. See how the market's been behaving the last several days and last week since we spoke. What is everybody's take on the market? How has everybody been doing? What have you guys been trading? Where just kind of give me a little update there. Mel, the significant thing about the chat box is that there is a new one when you start talking. Oh, okay. Okay, that's good to know. That's good to know. So how has the stock market treated you guys? Who has done some options trades this week? Who's done some stock trades this week? What have they been? What have you done? How has it gone? Etc. Etc. I'm curious to hear everyone's experience thus far. It's been an interesting week. It's been a good week. Market's up a bit. Okay, so Mel, just watching so far, which is okay. Certainly nothing wrong with that. In fact, I fully support that activity. Who else? Anybody else got out there and made some trades, taken a dip their toes into into the whole market? I'm definitely interested. Oh, okay, there we go. There we go. The juices are flowing. Lenny bought a little American Airlines, GE, AMTD. Okay, TD Ameritrade, right? Janae, everything has been going up for me, no matter what the market. Okay, good. Amy, good. All right. Dan, doing a lot of watching and finding everything seems to be going up with lots of volume. Yep. Got a couple of day trades that paid. Good, normal. That's great. Didn't fill my rig credit spread. All right, Waylon, there you go. Reading about covered calls. Not sure how to tell when you have a good one. Good question. Okay, AMAT, I got you. AMAT instead of AMTD, which is also a decent stock. I can't remember. I was talking to somebody about AMAT actually, and they said AMAT. I said, it's just letters. It's an acronym. Pronounce it however you want. AMAT. Good. Okay, guys. So here's a couple of things that I want to talk about. I mentioned 2 weeks ago. I said don't short this market. Just buy dips. And then last week I said you can short the market if you want. And now we're looking at kind of an interesting little trickle higher, and I'm very curious to hear everyone's thoughts on kind of what we have going on here. We're just going to be looking at a few examples, and we'll see if we can make some sense of this. Kevin, my friend, good to see you. Glad you could make it in. Sold several calls on longer positions. Everything is plugging higher, losing the premium there, but principal increasing. I gotcha. Guess that's what they call it. There we go. Yeah. Good. So here's a little bit of kind of what I've been just watching. I'll just give you a little bit of an idea. We talked a little bit last week about how the market, in general, we'll just use the SPY for an example here. If anybody's not familiar with the SPY, this is just the S&P ETF, right? It just follows the S&P. Just buys a bunch of contracts on the S&P, does the same old thing. So what we had here and what we have is we had this interesting pattern, right? Where this is my 50 and 200 day moving average here. And we talked a little bit about how, these guys crossed back here, gave us that little cross. And we had this big move down, and we've been watching this kind of consolidation higher, right? So crossover, and then what we would call a nice rising wedge. So I thought this rising wedge, given all things market condition related, should play out, right? This rising wedge should run up here and break out, which it did, and work its way lower, which it did not. Now, interestingly, I'm still kind of curious how this rising wedge situation is going to play out, because as I look at this and I think to myself, it's a pretty clean pattern, and it is actually holding, right? So it's been consolidating below that rising wedge and kind of creating a secondary channel, which I could still see making a little bit of a move down for us. Now I'm kind of zoomed in, so my drawings are extra bad. They're already pretty bad. They're extra bad. So we see that happening, right? We see after hours trading is down a little bit. You can see the futures market as well. It's down a hair. It's down. We've got this nice little rising wedge here as well, and it's breaking out. It's down. It's starting a nice little potential move lower. We'll see how far that goes, but I have found myself a little extra focused this week on just kind of watching these patterns. We're seeing this happen everywhere, and so I wanted to just remind everybody, sometimes just the simplest things are all we need. Now, if I try to apply logic to this market, I don't think there's much, right? Does anybody feel like you can just trade this whole thing logically and that it'll make sense and you'll be profitable at it? Because I think the logical thing would be to say, today we had weekly unemployment claims. We're now at 30 million unemployed in the US. 30 million, that is, that's a lot. That's a pretty high amount. And I believe this, somebody correct me if I'm wrong, do we have employment job numbers this week? Is this tomorrow? Is this Friday? I better double check. Here's my calendar. Do we? No, we don't. It'll be next week. Okay, so on the 8th. All right, so on the 8th we'll have U.S. Employment change and unemployment rate and so on. So the unemployment rate in the U.S. was in the 4% range, and it'll be interesting to see what it is next week, a week from tomorrow, where that unemployment rate goes. Are we going to go up a lot or a medium lot? Yes, we will. We're starting to see real bad, job disappearance numbers, right? 700,000, yada, yada, right? So for like the last 10 years, we've had monthly positive job creation numbers. So we created about 25 million jobs in the last 10 years, and all of those have been zapped up and are gone, plus some, right? So yeah, Ryan, yep, today we had another almost 4 million unemployment claims. So that's pretty intense. So again, if you apply logic to this market and you say, okay, we have this ridiculous unemployment situation that's building that weirdly nobody seems to be talking about. I don't know, maybe they are talking about it. I don't ever watch the news, so maybe they are talking about it, but it doesn't seem like it's the topic that I would think that it would be. And I wonder if the market and everybody else is kind of just thinking, hey, when the restrictions are lifted, everybody's going to be so pent up, which, by the way, I think that this is possible. Everyone's going to be so tired of being in their houses. They are going to dive in headfirst to every restaurant, every movie theater, every salon, every whatever else they can get their hands on, and just go for it, right? And that could be the case. I myself, it will be a while before I go to a restaurant. It'll be a while before I go to a movie theater, like 6 months, because that's terrible. So, those things I think about, but beings on the cliff. There you go. So I think these things are going to be interesting, but it's going to be strange to see how the market kind of reacts to that, because right now I just think about the fact, 30 million unemployed people, even if half of those people get hired back immediately, is that going to be enough to kind of keep everything on track? because there's a lot of doom and gloom, and I'm not a doom and gloom person, actually. I'm very much not a doom and gloom person. I talk to a lot of people that just watch news 24 hours a day, and it's end of the world stuff, you know, typically with those people. I watch news 0 hours a day. I do read headlines of financial news because that's really all I care about. But when it comes down to all the rest of it and all the conspiracy theories and everything out there, I just don't pay attention to it because I can get sucked into that. I don't want to go there. So I look at this and I think to myself, a lot of unemployed people, there's going to be a lot of blowback on that. Is the government going to be able to just spend their way out of this, which I think they're trying to do? If so, will that keep things going higher? We see futures already heading a little bit lower. We see a very common pattern right here, which is a nice rising wedge that typically does exactly what this is doing, right? And it would make sense that that would break out and head down. We've got economic problems we're going to have to deal with in a major way. Are people going to be super excited to just throw discretionary spending right back into full gear and just say, oh, so glad everything's back, opened up again. I'm going to go buy a bunch of stuff because I have tons of money all of a sudden because the market's open or society is open or whatever. So I just look at that and I think on the logical side, it doesn't seem that that would be the case. And we're seeing on the chart side of things that that's not also that's also not looking to be the case. Now, I get to points in my trading career over the last 20 years or so where I just think to myself, I have no idea what is going on. I will just come out clean and say it to everybody. I don't know what's going on here. I don't know what's going on. And when I get to that point, usually what I do to myself is look myself in the mirror and say, okay, stop trying to overthink this. Stop trying to even make any sense of this because it never makes sense anyways. As we've talked about many times, how many times have you guys seen a stock that of a company you love and you think they're so great? Everybody you know thinks they're so great and their stock is in the toilet, right? And you think to yourself, why is that happening? This company is the greatest thing that's ever happened. Or a company that everybody hates, nobody's ever heard of, et cetera, and their stock's going crazy. Why do these things happen? We just can't try to make too much sense of it. We have to revert back to just trade what you see, right? Look at the charts and trade what you see. That's it. That's all we can do. We can't do anything else. We can't outguess this market. We can't outthink this market. We just have to say, what do I see in front of me? And I'm going to deal with that. And I'm going to work with that. I'm going to trade that. And that's where I am right now. I could see this kind of thing happening because the stock market loves to do the unthinkable. It loves to shock. And so I could just see right back to highs. I could see that happening for the aspect of just saying, guess what, guys, you got it wrong again. But as far as if I just didn't know anything about this chart and I just took all the thought out of this and I just said, what do I see happen on charts and how do I see things go? Then this is what I'm looking at. This is what I'm looking at right here. A strong drop, a consolidation in a narrowing rising channel, a rising wedge, which leads to typically a breakout and a continuation down. Now, we're not seeing the market want to break out much. Now, we see futures breaking out here. We see SPY making a little bit of a down day. It closed at 290 and we're trading about 286 now. So futures are selling off a little bit, right? We're seeing the market down a little bit, and we'll see if it has any fall through. Dan, my thoughts are S&P is still going to move down because it seems to be oversold, and stochastic indicators seem to be taking a downward trend. Today's candle would seem to send the signal on this chart. Okay, good. Yeah, I think that's a good assessment, Dan, for sure. Martha, I don't think people will dive right back or right in because a lot of people won't have the money to dive right in. I think that's a good point as well. I mean, if there's 30 million unemployed people, are they just going to have all the money to spend because doors are open, or are they still going to not be doing that, right? And so I think that's where things get interesting. And that's where I just say, I don't know. I'm just going to trade what I see, and I'm going to do what I can here. So as I watch this rising wedge on SPY, as I watch the rising wedge on futures markets there, I'm just seeing, if I readjust my angles here just a hair, and we say, okay, SPY, my friend, let's readjust that. Let's say that's our rising wedge, because that's tested plenty of times, and that still gives us a decent rising wedge. Let's say, okay, there we go. That's our area. And right now, right where this sits, right in this zone, we're still kind of in the middle, right? We're kind of in the middle between that high and that low. Worst place to be, unless we can get some good chart identification, some good consolidation, some good breakout, some good just confirmation of saying, this is what we should be looking at. This is what we should be doing. I'm watching this, and if I see that we get a nice break of this channel, right? Because this is now kind of had to be readjusted because we had that breakout and it just consolidated up the backside of that channel. So I'll say, hey, okay, no problem. We'll take the last week or so of movement, week and a half of movement, and we'll watch this for a breakout. We'll see if this makes its move, right? We'll see if we get that little movement down below that rising wedge, and we can see this start to head lower and start to make that move down. So do I think that's a good possibility? Yeah, I do. It's not uncommon to get this kind of big movement down here and this big pullback into the moving averages, and then kind of just, you know, I'm not saying we have to retest the lows, but I'm saying, number one, until I get some confirmation, I don't feel like there's a whole lot that I want to do right here because we're just right in the middle again. And now we're inside of a pattern. We're inside of a very predictive pattern here that tells us after a big rundown, a pullback and consolidation higher is very common, which is then followed by another breakout down. So that could be the case. That could be what we see happening. And I'm just kind of wondering if that's where things are headed, right? We saw the VIX over here. The VIX has been coming down hard, right? All the way from these 85 highs. It's just been tanking, dropping. And it gets down here and it popped up. The VIX had an up day. And you know, volatility spiked a little bit. Not much, but it came up a little bit. And that's a good indicator that maybe we can start to see a little bit more of this downward movement here. A little more of that downward movement. Now we see these kinds of patterns starting to pop up everywhere, right? Let's just say Bank of America. Obviously I have this drawn in here already, but I would even kind of look at this at Bank of America a little bit more like this, a little bit more kind of in that rising wedge kind of fashion. And we see all these banking stocks doing this, right? We keep hearing how healthy banks are, and I believe they are healthy, and I believe the government's just going to shell out money like nobody's business. But it doesn't change the fact that we have a big drop and a consolidated rising wedge, which should give us an opportunity to revisit some of these lows. We see this happening kind of a lot. Clearly, I've got a lot of messy lines over here, but it's that pattern that I'm starting to see pop up just about everywhere, right? And if I know nothing about any of this, it's just telling me, well, I don't know. Big move down, consolidation, downward. So I've just found myself kind of finding these charts and saying, it all looks pretty bearish. It all looks pretty bearish to me. I can't, you know, I'm not putting any money on this bet yet because I want to make sure that I've got the right kind of confirmation. I want to make sure that we're breaking out of that area right there. We're breaking out of that pattern. We're getting below that. We're starting to get that push lower. That's the kind of stuff I want to see. So I want to kind of bring up, you know, again, just the simplicity of it all. How do we, you know, what are some good patterns to look for, right? What are some things that we that we want to find? Here's just a very super duper simple. I wonder if I can send. Can I send a file? I don't think I can send a file. Can I send a file with this? We'll find out. I guess probably not. Well, I guess I can. Anyway, I'll anybody that wants this, I'll post this in the Telegram group and in Skype and so on. Sorry, I think we have a question here. Dan, Jared, I completely agree. I've been doing some paper trading review and have settled on about 25 stocks that I think could be played out. But 2 are looking Two are looking bullish. Okay, but you think the others are looking bearish? Is that what you're saying? So, gotcha. So these are some real simple things we can look for, right? And I want you guys to all spend a little bit of time this week trying to find these bearish setups, trying to find this kind of movement that we can commonly see, right? So the one I'm talking about here is a nice little, as we mentioned, a nice little bearish pattern. There we oh. Lenny, you sent me a good link on how to in-meeting file transfer. Where is it? Where is it? Down here. Hold on. I'll pull it up here while we're on so that so everyone can get a little peek at this. Thanks for sending that link over. But I want you guys to kind of look at all this stuff, right? Here is this rising wedge that I'm talking about, right? We get a big move down, and we get that consolidation up and a breakout down, right? Some of these charts, we're seeing some of these things, right? We're seeing some of these descending triangles. On a few, we might be seeing some ascending triangles, but we're getting some of this. We're getting some of this. We're getting a little bit of a bearish pennant. Those are happening as well. So we're seeing some of this stuff, and I'm starting to think to myself, I would be getting a little tiny bit nervous, right? About just trying to dive in on some of this stuff and go for it. So again, I'll post this file, and you guys can all have a look at this, but I want everybody to kind of spend a little bit of time looking at some of these, and let's make some comparisons. We've already looked at this one right here. How about Delta, right? We've been talking about Delta. We've been talking about this kind of making its move. We do have quite a dramatic cross there. You know, the moving averages are making a big cross. We're getting that big movement there. We know that $20 is a nice round number and a pretty strong support level. But are the airlines, you know, are they ready to make a move? What do we have going on here? This one, if I just had to kind of look at this, I'd say, that feels pretty, that's kind of a combo right there. You kind of see a little bit of that, right? We've got a little bit of a combo. That's kind of more of, we're probably looking a little more at this guy right here, a descending, I don't know. This is a little more of maybe a bearish pennant because, but again, it doesn't, none of this is looking bullish at all, right? Bearish pennant. We've got that big root run down, and we've got those rising into a triangle type channels here. And that tells us typically we see that, right? Again, maybe none of this plays out. Maybe this all just blows everybody's minds and goes totally bullish. But so far, I'm not seeing any evidence of that on really any of these charts. Now, the exception, of course, you know, we've talked about what we see on the SPY, SPX, you know, same kind of thing. SPX made a little breakout here, but it's still staying below that rising wedge. If we expand that breakout to something like that, still a nice rising wedge, you know, nothing really changes. We're just kind of watching for that breakout, right? And this pullback has been intense. Now, we've talked a little bit about some of these Fibonacci levels and just saying, look, let's just go with some technical stuff. We'll just see what we can see here. We'll take all the dirty details out of it and just say, where's some pattern, where's some support and resistance levels, what's going on here. So from this high to low on the S&P, this is the SPX right here. We're right at that upper retracement level. We're right at the 200 moving average. We're right at the 61% retracement level. We're right at the top of a pretty intense rising wedge, which is a pretty bearish pattern, right? So I just look at all that and I think it's going to be hard for me to just say, let's buy the heck out of stocks and let's just go for it. And let's just pretend like none of this ever happened and just keep going. It seems like this is something that needs to make a nice little move down, and we need to be getting in against some of these real kind of, you know, real recent highs, right? And start looking for those breaks and start looking for those movements and still trading some slightly more conservative trades, right? Maybe some bearish call spreads. A credit spread in this kind of scenario is great because we can let this, you know, mess with everybody and kind of go like that before hopefully going like that, right? And we don't have to sweat the you know, the problems we have with maybe buying a put and the time value that's getting eaten up and all of those things. We can just say, let it run, take a minimal risk, and let's just get this going. This is not a time to try to really aggressively predict what the market's doing. In fact, it's just the opposite. This is a time to be careful. I know that there's the old saying, and this is where a lot of people are getting caught up. If you're an expert trader, totally disregard what I'm about to say. If you're not an expert trader, listen to what I'm going to say carefully, right? Which is, there's the saying of when people are greedy, we should be fearful, and people are fearful, we should be greedy. I don't know that anybody's so fearful right now. I think people are starting to get greedy, right? Can I get some of these stocks at a great price? Can I do some of this? And I think the other ones are a little clueless, right? There's a little bit of greed and there's a little bit of cluelessness going on. And that's a good time for us to be extra cautious and extra careful. And it's also a really great time for us to say, watch the chart. Let's take our opinions out of it. Let's take the news out of it. Let's take everything out of it. Let's just believe the market. I always say the only place I need to get the news is from the market. People have asked me, especially from around the country or from around the world, some of the people in my trade groups and so on, they've said, can you believe some of those press conferences and some of the things Trump has said? And I always say, I can't believe any of it because I don't know what any of it is. I've never watched a single daily coronavirus update. I just don't have time for that stuff. And I have no need to sit and listen to politicians jabber on about whatever it is they talk about. All I care about is what I see happening in the market, right? And of course, you got to know a few basic details. When's the economy going to open up? Okay, how optimistic is that going to be for the market? Probably very optimistic. But it doesn't change what I see on the charts. It doesn't change what I see right in front of me here. And that's what I am so much more interested in. I don't care what any politician says. I don't care what anybody's opinion is about anything because ultimately it doesn't matter. It's like people say, why did the market move up or why did the market move down? First of all, nobody ever really knows. There's elements involved that we can say, oh, well, it's a coronavirus. Yeah, that's part of it. There's other things involved as well. But nobody knows, and it doesn't matter. What matters is what we can see on these charts and the numbers that we can put together and the things that we can trade that we can see. That's what matters. The rest of it is opinion and editorial and whatever, right? Yeah, don't even bother watch them anymore. Yeah, that's true, Mel. That's true. So, so that's the kind of stuff I'm looking for. Now, some of you know that I trade currencies a lot. Some of you may not know that I trade currencies a lot, and I do. But as I look at these charts, I start to see other things across other markets that are telling me that there might be something to look for. Norval, it's something that has saved my bacon many, many times, right? Many, many times, which is trade what you see. Stop trading what you think or stop trading what should happen. I bring this up every week, but a lot of Tesla traders were short because they thought Tesla should not be going up. Well, Tesla didn't think Tesla shouldn't be going up and it went straight up, right? So it's that kind of stuff that we say, just trade what you see, because all of our opinions in the end don't matter. What matters is what the chart is doing and what the market's doing. So let's take our news from the market. Dow had its best month since 1987. Yeah, we've had this crazy recovery, right? I mean, if you look at the Dow, if you look at the S&P, I mean, SPX here is up from that crash low to kind of right in this little general area here, 34%, right? It's up 34% from the low. That's pretty massive. Now, yes, it had a pretty big run down here, right? We had a pretty big move down of about 35% off that high, but we've recovered a massive chunk of that, right? A massive chunk has been recovered from, you know, as you can see, more than half. I mean, halfway would be our 50% right here. So we're at about 60% of this move has been recovered. So what do we do with that, right? We say, well, it's just going to be a pure V bottom, right? This is going to be exactly like end of 2018 where the market sold off for absolutely no reason at all, right? September 2018, whammo, whammo, total recovery. There was also no reason for it to sell off, right? How far did we drop from that high to that low? 20% right on the nose, 20%, right? We went a little bit further on this one, 35%. This dropped 20%, but it just came back completely. But again, there was nothing wrong here. The entire world didn't get shut down, right? There was zero unemployment was caused from this movement. So now we're in a little bit of a different situation here. And I'm not, I'm just not 100% sure. A lot of people said, stop comparing this to 2008. I said, you're right. I should stop comparing to 2008 because it's starting to look a lot worse than 2008. But then the market's telling us, well, is it worse? We had a horrible sell-off, but are we going to continue recovering just nonstop? Or is this recovery going to need some recovery, right? So the recovery of the recovery, right? We've had this big move up. There's got to be some movement down here. And that's where I think our opportunities to participate in this rally are going to be really, really good. So that's what I kind of want to see happen for us here. But I'm just saying, look, stick with this stuff, right? Let's find where the market's going. Let's stop trying to guess. It's a good time to do some day trading or some very short-term trading, 1 or 2 day, 3-day positions that you're just in and out of very quickly, or some pretty long-term stuff, right? I would be looking for some aggressive short-term bearish trades on SPY, on some of these stocks that we're looking at. But again, if we look over here at the NASDAQ, we have seen tech stocks have made just a complete recovery, right? Tech stocks were just bullish from day one all the way back up to just about those highs, right? Our highs over here were, NASDAQ 120, and we've already been up to about 115. So we've come just shy of those highs. Total V bottom, total V recovery here. Super, super interesting. But the rest of the market is not quite there yet. We're getting the same kind of look on the Dow, where we've just got that nice little bearish rising wedge. So I'm just real curious to see how that plays out. And I want everyone to, spend a little bit of time, a little bit of energy looking over some of this stuff right here. And like I said, I'll post it into Skype, and I'll post it in the Telegram group to just kind of watch for this stuff, because I think it's gonna. I think getting an edge on this market could be the simplest thing right now, because everybody's overcomplicating it, myself included, right? Why is the market recovering so much when unemployment is so out of control, right? Why is this seeming to be like nothing's wrong when things seem like they're wrong? Again, whatever it is I think doesn't matter, because what are the charts telling me? The charts are telling me we're recovering, we're heading higher, things are coming up, but we're coming to a point. We're coming to a decision point here, and that decision point is big rising wedge, big move. Now, we saw today, or not today, but this week, I think it was on Wednesday. Did anybody watch the FOMC statement and what Mr. Powell had to say for himself? Anybody watch that? Basically, we're going to spend our way out of this whole thing. We will inflate our way out of this whole deal. We're going to just print money like it's nobody's business, and we're just going to buy our way out of this whole problem, right? We're just going to go for it. We'll just spend every darn penny and just get out of this whole mess. Maybe it's going to work. Maybe it's not going to work. Who knows? But it's going to put us in an interesting situation here. Hey, Steve, it's a trap. Could be a trap. It's going to put us in a pretty interesting situation here of is this recovery just going to go on forever, or are we going to get some sort of confirmation that happens? Now, for the currency trading side of things, for those that are less familiar with currencies and more familiar with stocks, we have an interesting relationship specifically with the Japanese yen and the U.S. stock market. Does anybody know what that is? 20% interest a year. That should be no problem. Back to the gold standard. Yeah, we'll see. I mean, I feel like anything could happen at this point, right? Inverse with the yen. So Yes. Yep, Ryan, you're right. Yeah. So inverse with the yen means if the stock market is going up, the yen is typically weakening. If the stock market's going down, the yen is typically strengthening. So that's kind of a bit of what we see. Um, it is it's interesting to see if you look at some of these yen pairs. Look at the Dow, right? This is the Dow right here. This is the SPY, SPX, whatever, all the same, looking kind of charts. We see the same thing in banking stocks, and we see a lot of this stuff as well. If you look at a chart of the Japanese yen versus a lot of currencies, right? And the reason I picked the Australian dollar versus the Japanese yen is because I'm looking at this because the Australian dollar itself particularly represents a risk-on market, right? The Australian dollar will rally when it's risk-on, right? When the stock market's going up, when confidence is high, volatility is low, that's just heaven for the Australian dollar typically. And that kind of stuff causes Japanese yen weakness. So this is going to be a little strange for those that aren't familiar with currencies, but we have two currencies paired with each other. We have one super risk on and one that reacts really heavily to this risk on market and one that reacts really heavily to a risk off market, right? And that's why I've picked this one because, again, when everybody's feeling like things are better, we get a lot of strength out of the Australian dollar. Australia, this is a commodity currency, and when those things are starting to move, then we really see that Australian dollar strengthen. And so here we have the Australian dollar versus Japanese yen making that big run up. And the yen's been weak, right? So when this chart goes up, that's Australian dollar strength and or Japanese yen weakness, right? Because we just have to look at the exchange numbers here. As this goes higher, it gets more and more and more and more and more and more expensive for the Japanese yen to buy Australian dollars, right? And so we're losing yen strength and we're gaining Australian strength. So does anybody feel like it's a little bit strange that this chart looks exactly like the Dow and the S&P and a bunch of banking stocks and a bunch of other stocks? Does anybody find that strange at all? Because when and if, good grief, end of the world over there. When and if we start to get a breakout on the stock side of things, right? We start, the market turns risk off a little bit and stocks start to sell off. And we start to see these patterns over here in SPY, SPY. We start to see these patterns play out. And these things start to happen. Then I'm going to look at this also because the Japanese yen will begin to strengthen, right? And we'll start to see this kind of movement because the risk onness will leave the Australian dollar and convert over to that risk off movement, which is Japanese yen strength. So I just think that it's a little strange that we see this kind of a chart looking exactly like we see the stock market looking. This all is feeling very bearish to me. I'm waiting for confirmation. I'm using simple things like, what are some basic patterns we can look at, right? What are some real basic patterns that we can watch and see how they play out and see what happens there? Those are going to be some things that will be very helpful for everybody to just take it back to the basics, right? We're all going to overcomplicate this. We're all going to overthink this, and we're all going to get it wrong if we do those things, right? Just revert back to trade what you see. That's what it's all about. Trade what you see. Don't trade what you think. So, Ryan, question. Are you suggesting using how the yen did overnight before we plan our trades on a given day? It's good to look at the yen. I think it is good to look at the yen because currencies all kind of have their role, right? The Australian dollar, the New Zealand dollar, typically, the Canadian dollar, those are all risk-on currencies. So if those have good movements, then typically we can see some good stock market strength. If those are doing bad, we see we can oftentimes see some stock market weakness playing out because these will run 24 hours a day. Currencies are traded around the world between banks and countries and so on 24 hours a day, right? So you can definitely look at those, and I do look at those. I look at all these markets every single day that I trade. I look at all currencies, all stocks, all indices, everything I can get my hands on every time before I trade. So yes, I think it is a good idea to do that. And then we always look at things like the Japanese yen. Again, if that is strengthening, it's not good for stocks typically. The Swiss franc, if that is strengthening, that's typically not good for stocks. The Swiss franc will typically strengthen as volatility goes up. You can see a pretty good inverse relationship not inverse relationship. It's actually a positively correlated relationship here where if the VIX goes up, the Swiss franc goes up. If the VIX goes down, typically the Swiss franc goes down. So those are things that I look at, and that's kind of where I'm coming from. That's what I'm seeing right now. People are asking me, they're saying, well, what about some specific trade recommendations? My specific trade recommendations for you will be watch for confirmation and trade confirmation. That's it, right? If you're trading the Australian dollar versus the Japanese yen, you should probably sell short as this breaks below. If you're watching the SPY, you should probably get bearish as this breaks below. If you're looking at Bank of America, for example, probably get bearish as that breaks below, right? So that's the kind of stuff that I will be absolutely positively looking at, watching, and seeing how it plays out this week. If things continue to go higher, so you might say to yourself, there could be a super missed opportunity if this just heads higher, right? What do we do? And that's a great question that maybe nobody had, but it's one that I would think about, right? What do we do if the SPY or just all stocks and the whole market just continues higher? What do we do? What do we do with that? What do you guys think? What can we do? What is the trade to take if this just heads straight up there? What is the trade to take? How do we enter on that? While you guys think of that, I'll read this question here. Amy, Bitcoin, not doing much with it. Not doing much. I'll look at the Bitcoin chart though in a minute, but I'm kind of steering clear of that one as far as just any of my positions. But yeah, we can look at that. Dan, I'm seeing the same setup on Aussie Yen as SPY over bought stochastics. Yep, good. Excellent. Mel, spread, it'd be a tough decision, especially all the other indications showing the opposite. So what I'm going to do here, and it was a little bit of a trick question, so sorry to put you guys on the spot, but a little bit of a trick question here. If this just continues higher, this just continues running up and just keeps going higher, we have to find some reason to get in. I promise you, if the SPY just kind of goes like this and just does that, I won't take a trade in there. I won't, and I'm totally okay with that, by the way. Some of you might be thinking, what a missed opportunity. You're going to miss out on that. Don't care. I only take trades that have confirmation. Only trades with good confirmation, and there's no good confirmation to be had here. No good confirmation. Now, if, on the other hand, is it raining? Am I hearing rain? If, on the other hand, we see, okay, this makes it a big move higher and does some of that, and I can get something a little more recognizable. Maybe I trade a bull flag on this because I'm really interested in patterns right now. Patterns keep me out of trouble when I don't know what I'm supposed to be doing. I just go with a pattern. It's just easier to say, I don't know what I should do, so I'm going to just trade what I can see on the charts. So if I see some pattern like that, yeah, I'll trade it for sure. But if I don't, and it just continues running higher, I'm going to let it run higher until I get a good reason to get in. Because right now, we're in the middle of a lot of junk, and junk is not good to try to trade. It's where people get eaten up. I could have sworn it was going to go higher. I could have sworn it was going to go lower. Just in case anybody's wondering, this is what makes the market, right? Nobody's ever going to agree on this, and that actually is what creates a market, is buyers and sellers. People that think long versus short is going to happen. So until I get some good confirmation of which one's going to happen, I'll do nothing. But all these charts that I see here are showing me some interesting bearish territory. Now, I'm not trying to predict that the market's going to crash or we're going to see another violent sell-off, but I could see some pretty good bearish movement happening out of this. This would be pretty great, by the way, if we didn't make a lower low. We just kind of had a little dip here, and then it headed higher. That'd be so easy to trade. Just watch that channel, buy that breakout, get in on that whole thing, and go for it. So that's what I'm looking at, guys. That's what I think we need to put our focus and our energy and our attention on is that kind of thing. And I think it should be fairly easy to follow along as long as we're reminding ourselves and remembering that's what we've got to be looking for. We've just got to be watching the charts and trading what we see. End of story. That's it. What do you guys think about that? What's everyone's thoughts, questions, comments? What do you guys think? How does that feel for everybody? Steve, I love it. I love Billions, by the way. I think it's just such a great show. So I will be watching that. Absolutely. Dale, you like it? Okay, good, good. Lenny, good discipline. That's right. We got to have good discipline. We've got to make sure that we're not trying to just trade this market. Remember, it's always a terrible thing to trade to be trading. Trading to be trading is never good. So we don't want to do that. Thanks, Mel. Yeah, Steve, thanks for sharing the info. Ryan, the moving average is a 200. This is a 200 exponential moving average, and the black is a 50 exponential. So in case you're wondering how to add an exponential, I'm sure everybody probably already does. EXPO, moving average exponential. It'll be different from just a moving average or a simple moving average or a smooth moving average. I use the exponential because I think that's the best one to use. Okay, anything else, guys? What do you think? Everyone feel okay about that? Thoughts, questions, comments? What do we think? What do we think? Let's see. Dan, can you filter for stocks under $50 in TradingView? Yeah, you can. Yep, you sure can. For the stock filter, I typically use FinViz. So, and that's real easy. You just go right over here to price and stocks under whatever price you want. So, so yeah, I use FinViz for that. I do. That's right. Wear a mask, Steve. I like it. I like it. Gives you something to do. Okay, guys, I'm going to post this. This guy right here in Skype and Telegram, so everyone can have a look at that. And it should be exciting. Should be good stuff. All right, you guys. Thanks for being on, everyone. Any other questions? Any other comments before we go? There's no rush. We don't have to get out of here real quick, so just don't hesitate. I'm all ears. Does everybody feel okay about everything? You feel like you can be patient, wait for the market to kind of give you a good feel for where everything's going? That all seem okay? Good, good. All right. Thanks, everybody. Thanks very much. Nice to see you all. Have a wonderful, wonderful Thursday, Friday, Saturday, Sunday, etc., etc. I wish you all the best of luck. I hope everyone's healthy and happy. And I always like to get together with you guys. You're all good folks. And you have great comments and great commentary, so I appreciate that. Next Thursday, it's on. Next Thursday, same bat time, same bat channel. We'll see you guys here. Thanks, everybody. Good to see you all. Take care, guys. Have a good rest of your evening and good weekend.